All right. What's up? Haywood CPA Live stream. I decided to shorten it. Haywood CPA Live. That's how we gonna brand it. You know, like that. It is June 19th. Outstanding. Glad to be here. Glad you're in the building with me. Um, got a few things going on today. We moved Baby Yoda to, let's see, that side right there. So he on my left right now. That's my comfort doll there. But anyway, I'm James Haywood CPA of Haywood CPA, principal of that. And we're here today to have a very good discussion, but we'll get to that in a second. First, I want to give a shout outs to a lot of the graduates. A lot of people graduating, especially from high school. My friends, there are a lot of my friends, their children are graduating from high school. So I want to shout some of them out. My man Brandon, he graduated. Brandon Littleton, he made it happen. That's good. My man Chris, no, I want to get my man Corey, who was on the last episode. His son graduated. My man Rob, his son Kyle just graduated. So it's good. I'm just highlighting some of the guys I got. The ladies, the young ladies that graduated. Big shouts to them. But with all things considered, I just wanted to highlight some of the brothers that's graduating too. So we got that in there. But it's good. Everybody keep graduating. Our intern at Haywood CPA graduated from Hampton this past year, Jasmine Miller. So, it's a good thing. So, of course, I had a reason for saying all that. I'm going to parlay it into what we're talking about because they're going to enter the workforce sooner than later. And they're going to have to know about something called cash flow. Now, that's today's subject, the power of cash flow. I went all out for the folks this week. Went ahead, did a quick slideshow so that we could talk about a few things. But cash flow is a very, 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 very important concept, whether you're in business or in your personal life. Now, the subject, we're kind of focusing on business, but you can apply it to your personal finances as well. And you should. And I'll kind of make the connection as I go through. So, with that being said, let's get to it. So, the power of cash flow. Cash flow is the lifeblood of business. And quite frankly, is the lifeblood of your personal too. I mean, I'll start with the personal. Now, one thing that gets misunderstood when people talk about how much money they make, they talk about, oh, I make 100,000, 70,000, 75,000 a year. So they live their lives based on that. I make six figures, blah, blah, blah. But you don't bring home six figures. You bring home less than that. So, when you're budgeting, you have to budget on what you bring home. So in the business context, it's very similar. I mean, the cash that you make, without turning this into an accounting lesson, is the cash that you bring in. Cash flow and the lifeblood of business. The reason I say that is because most businesses, people love to see this, 3 years, it's going to fail, or most businesses fail in the first 2-3 years. And many people think that's because they don't have sales. Well, it's actually because they run out of money. So running out of money is a lot more prevalent than not having sales. Now, not having sales happens, but they run out of money. So that's what's going on there. You run out of bread and you're up out of here. And so in the parallel, it's the same thing. I mean, personally, So we buy stuff. If you run out of money, you go get credit. It's easier to get personal credit, believe it or not, than business and credit. So you get credit, but still you run out of cash. But let's stick to the cash thing. So lifeblood of business, and we could just put lifeblood of your finances. Okay, let's just say that. So yeah, technician over here. Next slide. All right. So what is cash flow? All right. So I said, oh, I got my people up in here. All right. What's up? Good morning to all y'all. My true believers on here right now. So but what is cash flow? That's a great question. I use it. Sometimes I use it too much because people don't even know what I'm talking about. But it's cash flow. It is, well, let's start with, it's not profit. So, and if on a personal level, let's just say it's not what you earn, it's what you keep. That's one of my little statements. But cash flow is not profit in a business sense. It's not your profit. So where this plays out is client comes to us doing taxes. They may not have done their books. You know, we talked about that in episode 1, but they haven't done their books. So they're saying, okay, we do this form, we present it to them. Okay, business person X, this is what your profit is for the year. And 8 out of 10 times they say, I didn't make that much money. So, but that much money did go through the bank and you have to pay taxes on it. So what I'm trying to say is that the profit, your cash and your profit are two different things. Right? That's two different things. I know that's is beyond this prereq course I'm doing here, but they're two different things. So to keep that in mind. So cash flow does not equal profit, because you can have a profit that you pay tax on and the cash doesn't match. All right. So why is that? Oh, what is cash flow then? Okay. Cash flow represents the movement of cash in and out of the business, or personally in and out of your bank account. So that's what it is. It's as simple as that. Cash in, cash out. Now, I mean, you know, it causes people problems because a lot of people, I've met people who are afraid to look at their bank balances. They're totally afraid of it. But the one thing about money and finance is, it's factual. So you either have the money or you don't. You either spend it or you didn't. I mean, it's the only way for it to happen. So be in tune. That's one of the things I try to tell people. Be in tune to your money. Be in tune to your finances. I'm not talking about obsessing. And yeah, you need more cash in. People do. That's real. I mean, I'm not saying. I mean, I think most people. I tell people, I've never met anyone that has a job that says they get paid enough money. I had not once. If you send me somebody, I've never met anybody. I don't care if they're making $12 an hour or $300,000 a year. No one says, yeah, they pay me pretty fairly. I'm good. So no one does that. So, but it's representing the cash in. Now there's a flip side. You might need more cash in, but you might have to slow down the cash out. So those of you out there know who I'm talking to. So that's you also have to work on that. But that's what the cash flow represents. So, whoa. Yeah, I know. Just bear with me here. So let's talk about the sources of cash flow. Okay. Sources of cash flow. One of them, it is profit. Now, in business, it is profit. Presumably, you're in business to charge more for your good or service than what you pay, presumably. So, profit. That's one source of it. I think that's pretty straightforward. That's one source. You know, that's where it is. That's what happens. Let's go to the next slide. I got my engineer over here straight. Investment in the business. Now this is interesting here. Now, investment means, let's say you have a company and you need to cover the rent. So you take $1,000 out of your personal stash and put it in. That's a cash flow in, but it has nothing to do with your revenue and nothing to do with your expenses, and it has nothing to do with your taxes. Nothing at all. There's no. So now the money you spent the rent on, yeah, that's an expense. But this, just to keep it simple, this is something that's not reflected in your profit number. This is money that came in. So that's the first step to saying that, okay, it's not, but it's in there. You have money put in. So this is the thing. You only have 4 ways to get money into a business. One is the profits, the second is investments. So if you make an investment or you take investors and they give you, say, $100,000 to invest in your business, and you're up in there. Okay. So that's investment. That's the other way. That's the other source of cash flow. The next way, loans. Okay. Same thing. It could be a personal loan. It could be, a bank loan. But either way, no tax effect on that itself. That's money coming in. But that's money coming in. It adds to the cash you have, but it doesn't add to your revenue. It's not a taxable event. It's cash coming in. All right. So that's another. And then the fourth source is, come on, engineer, sale of capital assets. So if you sell something the business owns, like old computers, hypothetically, let's just say that, and you get some money for them, that money comes in. Now, there's a tax aspect to that, that you have to pay taxes, but those are the sources of cash. That's where you have cash. That's pretty much the only way you can get money into a business. No other way. So what I neglected to do is sources of cash outflows. So I didn't do a slide for that, but we'll talk about that. So these are your inflows. So your profits, your investment, your loans, and your sale of capital assets. Okay. Only ways you're going to get business, the primary ways. I'm not going to say the only way. Primary ways you're going to get money in the business. But outflows include your expenses. All right. Your loan payments. And most of all, draws to the owner. So the owners, this is a great one because of my experience. That means that if you own the company and you pull money out for personal use, that is an outflow. And it's not an expense to the company. That's right. Now, I've seen people do some amazing things and paying out of their business account. And they try to slide it in as an expense. And then when we're doing the taxes, so we look at the books, we're like, no, that's not an expense. Unless you could justify it, but it's not an expense. So, I mean, things like lingerie, going to the supermarket every day, and some designer clothing and handbags do not constitute business expenses for the majority of businesses. Now, there are businesses where those items would be expenses, but for the businesses in question, they were not. But major outflow, and there's a place where a lot of problems happen for business owners. Because they don't take into account stuff. If you pay somebody back the investment, you pay back the loan. Those aren't expenses, so it doesn't reduce your taxes. And on top of that, taxes, that's another outflow. If you do pay the taxes out of your company, you kind of create another tax situation because you're taking money out and it doesn't reduce your profit, your income. So it doesn't do that. So just take 2 minutes to go there. So understand, you have sources of inflows, you have sources of outflows. And every outflow is not an expense. That's what I want you to take away from this. Every outflow is not an expense. It'll make you your tax preparer will, if you absorb that, your tax preparer or your accountant will appreciate you even more than they already do, to understand that, okay, I'm spending money. Oh, another place too. another outflow, assets. If you buy a computer, or you buy a building, or you buy something like that, it's not an immediate expense in the year that you bought it. Get into depreciation. We might do that one day. We'll have to do that early in the morning because it's not as exciting as as cash flow. So, but let me see. I'm gonna take a break here. I got a question here. So, does being in tune with with your cash flow mean checking your bank account every day? It can. But I think what I mean in tune is what I mean by it is that you understand. Just start with, hey, I know how much I'm bringing in, and I know how much minimum I'm sending out, and that's that's the first step, because often spending is such a familiar habit that people don't, you don't think about it. You spend, you just spend money. You don't really ask, you don't ask any questions. So it's being in tune with that. But I think it's more so knowing, hey, I know I'm bringing this much, my net check, if it's personal, but even in your business, you know what the net is, you know what's going in the bank, and you know the minimum things that have to go out. So what happens is money comes in and you don't think about it. And you have your regular expenditures, and then you have a surprise expenditure, and then you have a want expenditure, and you do them all at the same time. So things happen all at the same time, and you get jammed up because you didn't plan it out. That's one thing about cash flow. You have to plan the cash flow. I don't know. I'm saying that I'm trying to see if everybody can you hear me? I've gotten. I hope my audio is still there, still on, but I'm gonna keep rolling with it. But that's what I mean being in tune, is understanding that, hey, I know I have this coming in, and I know what's going out, and you know things are going in, so that keeps you in tune. Now, yeah, your bank balance is good to know. Some people who remain nameless check it every day. I don't know, some people. So I don't know, but that's a habit that for me I've had from some of my earlier businesses. So that's that. Okay, great. Guys can all hear me. All right. So I may have an operator error on one part, but so that's what we mean by that. But I hope that addresses the question. I see. Oh, Leandra is in the building. That's right. The calendar due dates for each necessary expense in the business. That's a good one. I started with that myself. I did that, and then I had folders for each deal, but it's knowing what's going on. That's definitely, because sometimes, well, it doesn't mean as much as it does nowadays, but it used to be, the bank balance used to be misleading when you could write checks, because you could float checks, and then you might have 5,000 in the bank, but you wrote a check for 1,000 that hasn't cleared yet. So you really only have 4,000. You think you have 5, so you spend another 1,000, and then bing, 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 NSF charges or whatever. Now, some people, back when you could do that, I mean, you do it strategically, it carries you through another place. But I'm not going to get into all that, because it's not even available to you now. If you write a check, it pretty much clears the next day now. So we're not going to get into any of that stuff there. But some of the old school people know what I'm talking about. So, oh yeah, we were right on the question part. Guys are good. Right. So look, this is just an overview of cash flow. And this is a concept I'm going to revisit. Have some more content on it. But is like the most important thing in running a business. Because once, like I said, without cash flow, you're out of here. You will not survive in business. And heck, in your personal life, if you don't have, you run out of cash. I mean, you broke. You can't do anything, you know. And then, you know, you get credit at the end, but spend so much credit, it burns up. But this is a very important topic. It's not discussed a lot. Business owners, especially new business owners, they don't know about it, and it's important. I cannot stress this enough. It is very important to manage your cash flows. So let's take away what we're saying here. The inflows and outflows, pay attention to those. Also, when the inflows and outflows occur. If you know the first week of the month that I need, $2,500, then the next week I have payroll. The next week I might need 5,500. The third week I need 3,000, what have you. That's a level of detail that, I mean, you want to get to. You want to learn. You need to know in order to manage your business, because it is rough to run a business, but those are the things that separate people that are successful and people that go under. Because what happens is, and one of the good things, I didn't mention a source of in my slide, but grants. Let's talk about. I'm going to talk about our current environment, PPP, EIDL, these things that came up. PPP was good for some. EIDL good for some. PPP was tied to the payroll, to what your payroll was. But here's the thing about those grants, and you may have read in the news of how people, well, they're getting to the abuse right now, but some wealthy companies got the PPP. One of the things that happens when you get those types of loans and you remained open, that they weren't there to absolve you of your sins. So if you were able to manage your cash flow properly, you would be able to stash that money. And that's what a lot of companies did, quiet as kept. They all saying that, oh, we can't find anybody to hire now. That's because, they got relief money and we're like, hey, we chilling. It's that. I mean, that's why the stock market is out the roof, because companies were able to reduce payroll. So, and that's another example of cash flow. A lot of these companies, their sales did not decrease. And even if they decreased, their payroll costs decreased more than their sales decreased. Cash flow event. So if I make less, but I pay out less, the amount less than I'm paying out, whatever. Now I got an English teacher on here. I know that was grammatically just wrong, but if you pay less, if you decrease your expenses more than your revenue decreases, you still winning. But you do that by looking at the cash flows. So, I mean, I can't stress it. I may write a book on this, possibly. Okay, yeah, I'm planning on writing a book on cash flow, but it's there, and I'll round up for the wage owners too. Look, I mean, yeah, I get it. They giving away credit. You have to be careful, especially with credit, like purchasing a home, because underwriters, they qualify you based on your gross income. That I make $100 and something $1,000 a year. But remember, we said in the beginning, you don't bring home $100 and something $1,000 a year after the taxes and your insurance and whatever, any contributions you have to charities coming out of there. You don't make all that. So what you have to do is understand that you have to be able to afford the payment. They may qualify you for $800,000, $900,000, and then that mortgage, let's call that mortgage $4,500 a month. You currently paying $2,300. Nothing's changing your life. You didn't get a raise or nothing. They qualified you for it, so you go buy the house for $4,500. So listen, at the end of the day, where are you going to make up that $2,000 difference? Where is it coming from? So where you got to know where you got to balance it out, especially if you have wages, and for the most part your salary is fixed. I mean, people don't like in it, but you're on a fixed income. Your income is fixed. You might get bonuses if whatever you're in, but it's fixed. You know what you get the same amount every period. So if you make a huge purchase or a change in your financial dynamic, what's going to be the adjustment to keep you in balance? Like I said, those big companies, they lose revenue. What do? They lay people off. And then their profits go up. Isn't that interesting? So in your household, if you have an increase in expenditure without an increase in income, how does it work? And then some of the mentality towards when we buy a house. Look, if I buy a baller house, I gotta furnish it. And not saying you go to whoever rooms to go or whoever you got, they'll give you can buy the furniture and pay for it over 6 years, just long enough for you to buy some more furniture from us. So it's credit. So you're not really, you getting stuff, but for lack of better words, you can't really afford it because you haven't made this adjustment. Then heaven forbid something happens to your income. Now so your income goes down, your expenses stayed up in the household. You have all these different things that you spend money on, and you run into a problem. That's something we'll talk about on the financial flip side. We talk about more personal finance at the flip side, but because I do know, and businesses end up with owners. You could be a business owner, you still have to deal with your personal finance. So my whole thing in summary is that don't be afraid to look at your cash. Don't be afraid to get help. CPAs, financial planners are available. I'm going to bring some on the show so that you guys can hear from them face to face, and they're not the boogeymen or women, but it's finance is an intimate subject that you have to trust people and believe that they have the best intention as well as what they know what they know, but you have to really see if it's the best intention. They have your best intentions, and but it's something you work at, and I think now, because the system keeps getting more complicated, so we really do. I say I mean myself too. I'm obsessive compulsive about it, but that's because it's kind of what I do. But you have to pay attention to it. So, hey, look, if you have any more questions about cash flow or any other monetary topic, I got some resources for you here. I put them on the screen. You can email. New email address for any questions if you want us to answer on the next show, live at haywardcpa.com. Send in any comments, concerns, tips. We accept tips. Then our Facebook page, you can find us there, which I think a lot of y'all, everybody's logged in pretty much off of Facebook this morning. We're on Twitter at Hayward CPA, and you can also subscribe to our YouTube channel, where we're going to work on a lot of explaining videos to get in depth with some of these concepts, and give more information, because one of the things that we're trying to do as a firm is to empower. That word is they're beating it to death. It's becoming a cliche, but basically give people information. We're in the information era. There's more information out here. It's changing daily. And some of us, we're working on our financial literacy is like mid 20th century. And that's no one's fault, but we're here to try to correct that. So that's, as a firm, that's what we do. That's what we work with clients. But, everybody won't be able to be our client in the short term, but that doesn't mean that we don't want the marketplace to be helped. And, we're trying to give information. And I see a comment in here. This needs to be a podcast. Well, guess what? It is a podcast. It is launched. It is Hayward CPA Live. Should be on all your, it's getting syndicated right now. Google Podcasts, Apple Podcasts, We'll get it up on Stitcher, Audible, and it is the sibling to the Financial Flip Side podcast, which we'll be recording again, our monthly podcast with myself and Latasha Pugh, where we talk about money, but we also talk about politics and sociology and economics and places where it converges. And it's kind of pointed towards the culture. You know, we talk about it on that level so that you could do it. But all right, I'm taking the notes. See, this is live. I'm really listening, you guys. So don't forget, sign up for the notifications on our social networks, with CPA, the YouTube channel especially, and on the Facebook page. We gotta, we'll be doing better getting the word out too. If you have a topic that you would be interested in hearing about, feel free to send us an email live@HeyWithCPA or through the social media. Check out the podcast. You can listen to this again in case you want to take the notes. Audio in case you're driving around, pushing the whip, want to listen to that. And hey, 30-something minutes, we good. I appreciate your time. I appreciate you tuning in for Hey with CPA Live. Have a great day. Oh, and happy Father's Day to all the pops out there. Happy Father's Day tomorrow. And happy Father's Day to the mothers that's fathers and all that. All right. So with that being said, on behalf of myself, my man Grogu, and Drake, we'll see you next time.